Hello, it's Justin Woodall, your trusted Athens real estate advisor. Today I want to talk to you about the differences between investing in real estate and investing in the stock market and which one is better. Well, which one is better is going to depend on who you talk to, and really personal preference I think is a big piece of it as well. Now I'm a little bit biased, and so my opinion is real estate is a better investment, and that's my personal choice as well to invest in real estate, and it's because it's what I know. But there's a few things I like real estate, a few reasons I like real estate better than the stock market, and I want to share those with you. One is that simply when you invest in a cash flow producing, income producing rental property, it pays you every single month. And there are some stocks that will pay dividends, but the real estate will pay you every single month. There's a tenant that's going to live in there, that's going to go to work every day, earn a paycheck so they can write a check to you to cover their rent. So you're receiving that income every single month. I like that. Most people that invest in stocks, they invest for appreciation. Well, most of the time, and we've seen some down times with real estate over the last few years, but over the long course of time, real estate also appreciates in the same way that the stock market appreciates. I just like that I get paid every single month when I own rental property. Another reason is you can use leverage when you're buying real estate. And what I mean by that is most banks, if you're buying a cash flowing rental property, investment property that you're going to rent, most banks will allow you to borrow 80% of that purchase. So you put down 20%. As that home appreciates, the whole home is appreciating, not just your down payment. So let me give you an example of what I mean by that. For easy numbers, say you buy a house for $100,000. You put $20,000 down as your down payment and you finance $80,000. So the tenant's making your payment, you're making a payment to the bank, and what you're left with is what's called cash flow. So you're receiving a little money each month. But say over the course of the next 2 or 3 years, that house appreciates 10%. Then the $100,000 house is now worth $110,000. And so your $20,000 investment has now, in essence, earned you $10,000 more, which means that's a 50% return. So unless you're getting returns of 50% in the stock market in 2 or 3 years, then real estate may be returning, even on an appreciation basis, a little better when you leverage through the bank. Now, some people are adverse to debt and don't want to take that risk. They would rather pay cash for the asset, and that's okay too. So when you pay cash for that rental house, you still receive the whole rent check at that point, so your dividend is higher than it would be if you leverage the bank, and you still have 10% appreciation if it goes up from $100,000 to $110,000. So personally, I like real estate. Everybody's different. Everyone's situation is different. Everyone's preferences are different. But if you've thought about investing in real estate, my team and I have rental property. I've invested in rental property. We have a brokerage that does property management. We're familiar with it. We know what to expect with regards to rents. We know what to expect with regards to repairs, how to analyze houses, and things like that. So if you, friend, family member, or coworker has thought about investing in real estate, reach out to us.